Yes, sir. We're going to talk a little GameStop today, and it is not an April Fool's joke. GameStop went only down, and I went only long. And the reality is sometimes you're going to have it wrong. And the question becomes, how do you manage the trade? Do you exacerbate the situation? And what can you do to learn from the experience? Now, I remember when I was only short DWAC on day 2, 27 out of 30 scalp trades were to the short side that day. And this was not the same, but it's very similar. Now, first, we'll always go to the higher time frame, and I purposefully did something here where I left some of the lines I had in the chart from previously, just so you can see when I added some today that's a little bit jumbled up. And I think sometimes that can give you that confusion. A little bit looking at too much and finding too many levels when you want to be in one direction. They had the news of the potential split with the shareholder vote for additional shares, right? So there is a positive catalyst, and you want to expose yourself to the upside when the meme names do go. So that's the reason for the bias. Probably nothing too terribly wrong with that, but as we test in the post-market on that announcement for the news, you get a rejection of 200. So you had a just absolutely colossal rejection of 200 the day before. You then had the positive catalyst, reject the 200 level, and come back in the next day consolidating lower. We'll get to the short idea at some point here, but I'm looking at probably too many levels. I liked the previous high of 185 in the consolidation. It's a nice round number for you as well. 180 was a much more secure level as well. And then from there, 75 stands out as obvious, got that one channeled here back and forth, and then from there, 165. Of those levels, probably the only ones that mattered today, if you really take a look at on the downward path, 180, 165. You could make an argument for 175 in there if you could. But the first thing first, double top rejection of a level like $200. Okay? You then have a failure to break out at the open. That sets up for a pop and fade trade. That is mistake number one. You do not, that's a setup that I usually am going to take to short until it's wrong, right? So thinking initially long, when you have sort of one of your A-plus setups to the short side, fail, break down off of a double top, that is a short setup. It's try the short until it proves you wrong. I do not do that. Instead, I'm thinking dip buy at every single one of those levels. 85, stop out. 80 breaks up here and actually starts working for me. And this is where it gets hairy, because this is a chance to get the other direction of the trade, but it starts to work. We're up, we're thinking, okay, we take half out. It's about to make that run to 200. As a matter of fact, I'm not going to get anything else until 87 to 88. It doesn't even get there. It flushes, we get stopped out, and I'm like, that is a wick bottom. That's holding the next level again. We'll just take the same one. That is nice little wick bottom. We're rejecting. It's going to work. Another scalp trade that once again fails. At this point, the only thing that we're doing well is sticking to our stop levels, right? So we're at least limiting the losses on the way down here because I'm not really holding anything through. Same thing happens at 75. It's in, starts to work, goes back down, and then immediately rejects the level once we pick up the rest of our shares at 75. Same setup as that we got tricked on before at 180, wick bottom, take the break of the level above. This is the problem with having too many levels, because if you have 4 or 5 levels on the way down, you're going to get both bounce trades that you like, you're going to get false breaks that you like, everything. I'm just taking them all and then stopping out on the way down. At least we're not holding. When it finally breaks the absolute low, we do get the 165 bottom, which is essentially the full retracement. 165 was the biggest level back down there. So if I was short the stock, that's where your out would be. So it's probably, if I was doing things correctly, looking for a short until it's not, that would be the first place I was thinking about a long trade. So I end up getting this long because obviously I'm just going to end up with a long trade at some point that works. Let's be real. Either goes down to oblivion or eventually one of these levels is going to hold and I'm going to get a pretty decent scalp trade. At this point, it gets back up by like $6 or $7 and you can say it gets to VWAP. Fair enough, we take almost all of it out. We get close enough to positive, but that's more just you keep fighting. It should have been a short trade. I do try the reload a couple of times here off that 170 level. You can see it dump. Once again, we just take our stop. And then again, they're at 165. That's the last ditch. I don't even have anything that I'm looking at. The moral of the story is, if you have a setup or a set of conditions that indicates to you that a trade should be in a certain direction. Even if you don't like that direction that day, you might not want to be going all in the other direction. And that's what happened. I don't always short meme stocks, but that was a double top at 200. It was a failure to break the high at the open. That's a short till it's not. If it broke the top and I lose on a short, I don't mind that because I do that every single day. This time I decided to take about 1 million long trades and lose. Thankfully, we took every single stop when they were there, but that's about the only thing we did well today was get out when we were wrong. We were just wrong on too many different levels.